Good morning. My name is Justin Kelly. I'm the president and CEO of CPF Mortgage, and I come to you today regarding the big move the Fed made to reduce short-term federal funds rate to zero, and to provide clarity on what that means for mortgage rates. The first thing we have to do is make a clear distinction between the Fed funds rate and mortgage rates. So the Fed funds rate, how do we think about this? I want you to think about the Fed funds rate as short-term. I want you to think about mortgage rates as long-term, okay? Now, with saying that, the Fed funds rate, what is it? It's the rate at which lenders, or I should say banks, borrow money from one another. Banks have a federal mandate at the end of every day to have a certain amount of capital on hand. In order to make sure that they do have that capital on hand, they borrow money from one another. Typically overnight, that rate is the Fed funds rate, which they're borrowing money at. So when you hear the Fed say we're dropping interest rates on the Fed funds rate to zero, it does not mean that mortgage rates are going to zero, okay? Let's make that clear distinction now. Mortgage rates, more long-term, okay? Typically, these are driven by the bond market. However, we are in unprecedented times right now. We have never seen a situation where rates are not pricing with the bond market, and they've decoupled from one another. There's a few reasons for that right now, but like I said, we're in unprecedented times. Right now, what we have seen is a tidal wave of business come in with the last rate drop, which happened about 2 weeks ago, for a very short period of time. Everybody who got in had about a week to get in to do their refinance transaction or lock their rates at a really low interest rate before these rates started increasing and decoupling from the actual bond market. So what we're trying to do here at CPF Mortgage is ensure that as soon as the markets settle down and you guys are able to refinance your homes and your loans and get into lower interest rates, that we are ready for you. So what are we doing? We're going to reach out all week this week to as many people as we can, our past borrowers, current borrowers who are sitting on the fence, and we're going to start getting you prepared. We're going to get you asked that you send your supporting documents in. We get your files all set up, and that way, when the market settles and rates come down, we are ready to lock your interest rate for you and get you that lower rate that you deserve. If you have any questions over the current market, whether you should lock your interest rate right now, please give us a phone call here at CPF Mortgage. Our number is 727-226-1040, or you can go on our website at www.cpfloans.com. Thank you very much. This has been a quick market update. Again, my name is Justin Kelly, President and CEO of CPF Mortgage.